Okay, here I am again. Long time, right? No see. Allegiancy is in the middle of, or at the beginning of, a Regulation A+ IPO. We're raising $30 million. We are an established company. We started business in 2006, focused on commercial real estate asset administration or investment management. We don't own the buildings. We make them perform. And so we're not a real estate owner, we're a real estate operator, fee-for-service company. Established revenues, low volatility, high growth, very solid margins, and we expect our common shares within 12 to 18 months to be paying a 4 to 6% dividend. Now, if I push the right button, we'll see which way this goes. Yeah, there we go. So as I said, we don't own the buildings, we just make them perform. We have a proprietary technology platform that helps a building just like this one and the ones you see around you operate more efficiently, more effectively, build better relationships with tenants, assure long-term revenue and asset value gains. And that's a big deal because real estate amounts or accounts for about 40% of the wealth that is passed from generation to generation. So real estate is a big part of the base, the capital base of this country, and managing it well is something we think is important. And so how do we do it? What are we doing? So we're driving returns higher, and just like a race car, we have the Azul Motorsports guys up here earlier, there's a lot of technology in a race car, but without a good driver, the race car isn't getting very far. And Allegiancy is the driver of the real estate investment, the driver of that performance. Same thing with aircraft. You have a lot of high-tech technology in these aircraft. Big deal to get out there and fly one of these things and hopefully do it right. And so having a great pilot improves the outcome when you go into a battle situation. And every day, commercial real estate owners are doing battle in the marketplace to retain tenants, to be profitable, to attract new tenants. And having a pilot that knows what to do is an important advantage. And then when you think about leadership, you know that every great business has a leader that makes that happen, whether it's Jack Welch or Steve Jobs or Elon Musk. The leadership is a critical component to the business. And so what I want you to do is think about the commercial real estate. Think about the building across the street. That building is a standalone enterprise. It must compete daily for tenant revenue, it must pay its bills, it must eventually generate a profit or a return to its investors. Most of these buildings, you could almost say all of them, are standalone businesses that operate without the benefit of leadership. At Allegiancy, we provide that leadership. That's what we do. So here's our video. This is an ad that we have running in a couple of different places. There's nobody to make the video work.
How do you get the best performance? Well, at first, it's simple and easy to manage. However, you will soon realize that the situation can quickly become quite chaotic. But leadership changes things. It's true for music, and it's true for business. For owners of commercial real estate, Allegiancy is here to conduct business on your behalf. To bring clarity from chaos. Trust Allegiancy to bring superior outcomes and to bring the best possible performance.
So that's what we're doing, is bringing clarity from chaos and providing leadership to those businesses. They're often ignored, often people don't think about them, but our technology, our leadership, and our execution all combine to assure market-leading performance for commercial real estate investors. And it is a big, big asset class. So what we've done on the technology front is we have integrated, we have deep integration between 6 or 7 different technology platforms. And these are not platforms we invented, they're pre-existing products. For the most part, products that have been used for years in financial services, in banking, in Wall Street trading houses, hedge funds, places like that. And we're merely taking that technology and applying it to real estate. And our commitment is an important part of this. Part of what makes Allegiancy different is how we think about these things. We are always looking for the data that will demonstrate the effectiveness of strategy A versus strategy B. We're always analyzing the performance of the different pieces of a building, the different personnel that interact within a building, the different communication channels. And we built a predictive analytics, algorithmic decision engines, and process automation to enable us to do that very efficiently. Part of what that means is that we're able to manage commercial real estate income streams and asset values better with fewer people. We make faster decisions, and we prevent problems from happening. We keep things moving or fix problems while they're still small. And we've delivered winning results. We've been doing this for a long time. In the first 5 years, from 2006 to 2011, we focused on process and system automation. From 2011 to today, we've really been focused on building that technology platform and the decision engines that make the analytics, or the analysis of that data, something that's automatic and daily. And we've built the platform specifically to manage relationships. All of our technology, all of our automation, all of the process automation is built around the single important idea that the relationship that the business has with its client, and commercial real estate, that's going to be the tenant, that relationship is primary, and we need to spend more time and more energy there, less time and energy checking the boxes and filling out little cells and spreadsheets. And so we are automating as much of the low order work as we can to free up our time to manage those relationships. And the results are compelling. The 75% tenant renewal rate in our buildings has compared to a 56% industry average. In one property alone, that saved over $2 million in capital, which means we didn't lose the tenant, so we didn't have to go in there and rip out all of the construction, all their offices and conference rooms. We didn't have to rip all that stuff out and then go in and rebuild it for the new tenant. We didn't incur all of the downtime. We didn't have to pay as much in real estate leasing commissions. All of that capital, all of that revenue accrues to the benefit of the property owners, and they thank you, or us, Allegiancy, for it. And so our client retention rate is north of 95%. And all of that savings, tenant retention, saving on capital, means that we're able to deliver historically 230 basis points of incremental cash flow to investors, and that's more than $7 million paid out in the last in calendar year 2015. And that has a real operational impact. It impacts the building's operations, which makes tenants happier, and it impacts our clients. We had 400% growth in assets under management in the last year and a half. And what you can see here is a couple of quotes from actual clients of ours, actual investors, that own commercial real estate that Allegiancy manages. They did all the things we hoped they would do, to our great satisfaction, Mr. Cassidy said. Rolled up their sleeves, did a phenomenal job, increased the value of the property $7 million, from Mr. Burke. Their systematic approach and attention to detail has increased value. These guys understand what makes a property hum, and they know which levers to pull to assure the best possible financial performance. And so when you're paying attention to the details and you're staying ahead of the curve, you're moving up and to the right, to the right on your side, toward a 250 basis point improvement in returns. And the bottom graph is probably impossible to read, but the red bar is Allegiancy's cash flow paid out to investors versus a peer group in the marketplace. More money to investors is good. And so part of the technology is about building operations, but that's only a small part. So efficient operations is important, and it will help make your business more profitable, make your building more profitable. What you see here is two graphs. The upper graph is a minute-by-minute electricity usage at an actual building under our care. And you see that it looks sort of squiggly all over the map. The graph below it is after we put our technology into the building to monitor electricity usage and control that usage. And the much cleaner, crisper graph on the bottom represents over $150,000 per year in utility savings at that building. And that $150,000 of net income, capitalize that in current market rates, it's worth more than $1.2 million. So simple technology, about $2,500 of technology and about 10 man hours of expertise yields a $1.2 million value gain for the building and an incremental $150,000 a year. Plus, there's probably some positive ecological effect of not burning all that electricity, right? So it's green too. We have been very successful in our growth. We had $200 million of organic growth in 2014, $450 million of assets under management were added through acquisition in 2015. We've added $40 million of new contracts in the first quarter of 2016, even while we're in the marketplace doing a Regulation A+ offering, which adds some sort of uncertainty to the acquisition component. But we do have pending acquisitions. We have contracts pending with a private equity real estate manager out of New York that should be worth $500 million of assets under management this year. 2 acquisitions that we're working on that will likely deliver something on the order of $1 billion of new assets under management. So there's a lot of growth, and we are executing our strategy very effectively. A strategy is organic growth by doing a great job in getting referrals, growth by acquisition so that we're acquiring smaller asset managers who have not made the investment in technology, have not really embraced the past, but which is our future in real estate. The past, the technology is already proven. We're not inventing anything. We're merely applying it to an enormous industry that has gone, for some reason, wanting in that regard. And so when I say it's enormous, it's $15 trillion. Commercial real estate is the second largest asset class, actually third largest after bonds are the biggest, public equities, and then commercial real estate. The industry generates $886 billion in revenue every year. So if we're able to increase performance by just a little bit, it's a lot of money. There's an enormous opportunity out here. There's a huge marketplace. Really excited about every time we learn something new and watch our technology reveal new things, we turn over that rock and there's money under it. And there's just, the opportunity is astonishing. And only about 30% of the assets in the marketplace have institutional ownership. And so if you'll pretend with me that institutional owners do a better job managing their real estate than individual owners, you can see that 70% of a $15 trillion market is a bunch of assets to manage. Today we're right just under $1 billion of assets under management. So if we were able to get, well, I don't know, 1% of the 10 trillion that's not institutionally managed, that would make us a very large company, much larger than we are today. And I think we have the ability to do much better than that. And there's a compelling need for this. It's a transformative technology. There's a compelling need for somebody to get in here and do this better. And that's exactly what we're doing. The industry has been lagging behind in adopting technology. There's some people are talking about it now, but you're literally talking about an industry that is vertically integrated as if it was 1950. You're in an industry, commercial real estate management, the industry uses sticky notes as their database and a yellow pad is your decision engine. There's just not much actual technology being deployed on the ground. And that creates huge opportunities because there are a few players that are moving in that direction, and they're sort of the gravitational pull of the success that they're delivering, companies like Allegiancy, is moving the marketplace. Okay, one more quick video. Just this gives you an overview of what our technology looks like, how it actually works. Give you a feel for that. Radical? Absolutely. Proven technologies, reimagined, integrated, and applied to real estate for the first time. At Allegiancy, we're using technology to reinvent a 200-year-old, $15 trillion business. And increasing profitability, even a little bit, is a big deal.
Our role in the revolution began with radical specialization in an industry stuck in the vertical integration of the 1950s. Focus and technology drive innovation. For a business as entrenched as the commercial real estate industry, that's pretty radical.
The norm in this business is for managers to wait for things to happen. People are reactive rather than proactive, using the business process and tools from the last century.
The status quo means millions of dollars wasted, along with missed opportunities for growth and income.
Allegiancy has a very different approach.
At Allegiancy, we deliver active asset management that's aggressively forward-leaning. Our innovative technology integrates operations using data and code to capture over a century of experience in both real estate and finance and turn that into action.
Value assurance, it's how our team creates extra return on equity for property owners. Higher returns bring us more clients, and our growth of over 400% in the last 18 months tells you that it's working.
Today we have a portfolio that stretches across the United States with hundreds of vendors, thousands of tenants, all integrated through our technology. Value assurance keeps us on top of our continued growth, actually increasing profitability and efficiency as we expand our portfolio of managed properties.
So here we're looking at real-time data, basically every data point at every property we manage. We can track contractor calls to tenant upfit expenses and lease expirations, basically anything that will increase revenue or decrease expenses.
We're using technology to automate processes and map timelines. The resulting predictive analytics ensure the right person is notified at the right time.
Our proprietary dashboards and data displays give our managers up-to-the-minute information at a glance.
The algorithms and predictive analytics catch hotspots in real time before they become costly. The actions they drive create real value for our clients.
We have internet-enabled meters installed at each of our properties that beam us data on power consumption in real time. We can detect equipment malfunctions, call in local repairs if needed, or even rewrite controlling computer code so that systems are fully optimized.
Allegiancy's real-time data capture and analysis can help cut utility expenses by 20 to 30% on an average property. That could translate into savings of more than $100,000 a year, and those profits drop straight to the bottom line, adding real value to the asset. In today's market, it might be as much as $1,250,000.
Our technology platform captures and codifies decades of experience of senior professionals, allowing fast, effective, and consistent decision-making. We've reduced information lag from 30 to 45 days under the status quo to 24 hours. Rapid decision cycles accelerate learning and magnify our operating advantage.
Allegiancy's predictive analytics allow our asset managers to head off losses before they happen and capitalize on opportunities for profit that our competitors never even see.
We're disrupting this industry in a big way. In commercial real estate, we're the radicals.
And you know an industry is old and stodgy when 50-year-old bald white guys are radicals, right? So in the industry, there are direct competitors, as you might imagine. These buildings have not gone untended entirely, but the big ones like CBRE or Jones Lang LaSalle, those guys are all market generalists that try to provide services from soup to nuts, from property management and HVAC repair all the way up to selling your building and recapitalizing it in the capital markets. There's really no specialization in those enterprises. And so from our perspective, the most effective competition that we engage in the commercial real estate management business are the big players like a Blackstone Asset Management Group or Brookfield Asset Management Group. Those are the guys that are doing it better and making the investments in technology. But their services are not available for anyone, to anyone, except on the assets that they actually own. So if your building is not a Blackstone building, they're not going to be applying their expertise on your behalf. So we're really the only guys in the market that are specialized like a Blackstone or a Brookfield and available to the market more broadly like a CBRE or a JLL. And we're very focused. The red line here is the decision point. So we're the guys that are focused on that decision point. We're filtering all of the information that comes from the bottom, from operational level, and we're taking the owner's, strategies and their prescriptions in mind, and then we interact and interface and make sure that those things are always moving in the right direction. And our job is to stand in the owner's shoes and make sure that those returns are being realized, that those opportunities are being captured, and that the building's asset value is being optimized. And the systematic part is really important. It has to be repeatable. The technology is a critical part. Almost every other commercial real estate operator I've ever seen is very much people dependent. If you don't get old Fred on the job, it's not going to go well. They don't have systems and technology to make their business scalable and to assure consistency in performance. That's something we've spent an enormous amount of time on, and it's yielding tremendous dividends. From a practical perspective, where we are fiscal year 2017, which basically starts for us July 1, so it's a fiscal year company, we expect to have about an $8 million EBITDA. We expect to double that in 2018, add another 10 million to that level in 2019, and continue to move on from there. The $30 million we're raising will carry us through fiscal year 2018. We're obviously profitable in a meaningful way at that point, and then the next round of capital would be raised to accelerate that growth and uplist onto the NASDAQ. Experienced team, not just because we're old, but we've actually been doing this for a long time. Chris started in the mid-'80s, came out of Vanderbilt with an MBA, went to work for Prudential Real Estate Investors, the largest institutional real estate owner in the world at the time, became their head of equity underwriting, $10 or $12 billion worth of transactions. David Starowitz has a 35-plus year career in both publicly held institutional commercial real estate and private funds as an asset manager. Ron Mentis was part of the team that took Capital One credit card company from a sleepy subsidiary at Signet Bank and turned them into the behemoth that they are now. J.M. Ramey is general counsel. I think I'm out of time. Is that what this 3-minute thing is telling me? Or maybe I've actually run over time, but would love to have an opportunity to talk to you more. If you'd like to dig into the technology, we're very proud of it. Would love to be able to share with you some of our success stories. And I think the one thing I'd like you to leave with is the idea that because we have the data available to our people minute by minute, every single day, we have accelerated the decision-making timeline by more than 10x. So we're making decisions every day, whereas most of our competitors are looking at that information maybe once a month. And we can make a decision, take corrective action, evaluate its impact, and then repeat that cycle. And it makes all the difference in the world. Our advantage, our technology lead is only getting bigger as time goes by. Thanks very much.